Hey guys, welcome to the party. My name is AJ.
Hello guys, this is Lex, and as always, welcome back to another video.
So today we'll do a stock video. We'll cover the basics, what you got to look out for in the coming weeks. So tomorrow we got the Chicago barometer uh thing that's coming up. And then also there's the rate hikes. Uh, we got the consumer confidence. We got the FOMC meeting. We got the jobless claims coming up. Uh, Powell's press conference. Payroll unemployment rate. This is going to be a very, very interesting week coming up ahead, especially if you're in the stock market. We have Apple's earnings coming up. What to look for tomorrow? Monday there was not really much of a economy release except the treasury release of how much it was going to borrow, which is close to like 700 to 800 billion dollars. Uh, the markets actually did really good today. Dow Jones was up like 1.6%, S&P was up 1.2, and Nasdaq was up like 1.15. The slow runners actually today was Tesla. Tesla was actually really slow. People are concerned that a lot of those EVs are going to be sitting in the parking lot. There was an article coming out where EVs aren't becoming as trendy as they were before. And as a Tesla owner, I do think these EVs need to like really if they are amazing vehicles. I'm not gonna say I'm not gonna badmouth the EV industry. I love my Tesla, but service wise, parts wise, and insurance wise, and the battery wise, I think they need to improve on those four things in order to have a strong EV market. Why I say battery is because after a certain amount of mileages and everything, the batteries get shortened and shortened and shortened, and you have to look for either a supercharger network or you have to have like good charging service thing connected to your house. Now, with the energy crisis on the rise, it's better to have a Tesla Powerwall, and if you can't afford that, that's where things get very, very sticky for the consumer. Because if you want to have pay very low on your energy, you want to switch to electric. You want to get an electric grid, or you want to get a solar power roof, which is not cheap. Even though those tax incentives come, it's not very smart to do. Secondly, the insurances are very ridiculous in this. They want you to drive not after 10 p.m. and before 4 a.m. If you drive within those hours, you're going to be paying a little higher premium. If you go over 85 miles per hour, you're going to be paying a higher premium. If you don't wear your seatbelt, you're going to be paying a higher premium. If you don't hit the brake correctly, if you press on it too hard, you're going to be paying a higher premium. I think those things are very ridiculous, especially if you're going to try to enjoy the car. I think that would be something else to work on. Parts, it's always a delay on parts from especially secondhand insurance that isn't affiliated with Tesla insurance. It's very hard to get the parts if you do get in a crash or anything. So, uh, they do give you Uber vouchers, but it only covers like $100 a day. Uh, what else did we say? Parts. And uh, there's things on the Tesla like where the security, you can check everything, the data it collects. Something some people aren't comfortable with how much data the Tesla does collect. So that's something would cause Tesla to drop 5%. I'm going to share the screen with you guys. So this is the S&P right now. So we're looking at the S&P, and as you can see, Tesla is under $200. I mean, if you're a Tesla, if you're a Tesla long, these could be buying opportunities for you. Now, when it would be a good buying opportunity, that's up to you to decide. Uh, if you're a day trader, these are like amazing times to like just buy it and trade on the little bounce in the morning if it does. But right now, as you can see, the S&P in 2022 of January was at its peak levels right now, and then on the lows of in the next 10 months, it went down more than 100 points to its lower levels. And then obviously we had the year another beginning rally in January 2023, and you can see the rally that went almost to its high levels, but right now we're going down 10%. So from 456, we are at the 415 level. So we've down like around 40 points. So we have been in correction territory right now. So right today we had a little bounce up, but as you can see, for if we could take a closer look to it, you can see us making steps. So this, if it holds on to this level, we could assume, you know, some new highs going back up. We just need some powerful earnings coming, especially from Apple, and we and the decision of the FOMC and how long they do want to keep the rates. If they want to keep it longer, we can see, like, you know, with us going further down into correction territory. And then if, you know, there's more geopolitical risk or any banks belly flopping, we could see us hit back to the lower lows of 344. And if we do break those levels, it would probably cause a little, you know, panic selling. And we could see the lows of 300 too, which could be, you know, pre-pandemic levels. You know, we will probably see pre-pandemic levels. And if, you know, there's banks flopping again of the higher rates and the geopolitical risk of Israel and Palestine and World War III, we will probably see this area being the new trend line for, you know, the coming years. Obviously, like, you know, it doesn't take you know, these things, it looks like it happened rapidly, but if you look lower, it's 2022 to 23, so it takes like a long year for all this to happen and go down. It doesn't just happen like really quick. It looks cool on the graph, but you got to get closer to those days, and as you can see, it takes quite a few times. So I'm still in spectacle. If the earnings are good and if we do see a pause in the FOMC meeting, we might see a little run up. And if we have a shortened amount of these rates holding at their certain level, then we can probably see a gap up again, another, you know, run. But we'll see what happens this week. Anything you want to add into this, Lex?
Just hoping that everything's gonna be good for people, investors who, hopefully they're gonna be making money.
Correct. So further on, we'll be making more videos of the finance sector. We'll tell you what the estimates and what the prediction of the job openings are going to be, what the ISM manufacturing percentage is going to be, initial job list claims and everything. We'll get into that more in the next videos coming up. Thank you guys, and let us know if we can what we can do to be better, and we'll see you in the next one.
Thank you, guys.